Hi, it's Paddy Hirsch at Marketplace. So today I want to talk about the carry trade. A lot of people are talking about the carry trade right now because it's easy to borrow US dollars, okay, and do the carry trade and make money. So how do you make money out of a carry trade, and what is the carry trade? Well, let's explain that now. And in order to explain it properly, I need you to meet somebody whose name is Mrs Watanabe. She is a very nice lady. And Mrs Watanabe is, as she might sound, she is from Tokyo. And back in the 80s, she became very famous because she did this little trick with Japanese money. All right, here she is, Mrs. Watanabe. What she did is she would go to her local bank, okay, a little Japanese bank, and she'd say, "Can I borrow a bunch of money, please?" And the banker, who's a very friendly chap, would lend her money, say, I don't know, 10 million yen. Okay, so she gets 10 million yen, and she's borrowing because Japan, remember, was in a slump for a long period of time, like 10 years. Their borrowing rates were very low, just like they are in the US right now. The government had pushed borrowing rates right down in order to get people spending. So she would borrow yen at like 1%. Then she'd take that yen, she'd carry that yen, so it's called the carry trade. She'd take that yen, she'd carry it across, and she'd convert it into another currency, let's say for argument New Zealand dollars. Okay, and the reason she'd go for New Zealand dollars is because she'd look down south to New Zealand and see that deposit rates down there were much higher. Like, say for example, if she put money into her Japanese bank, she'd get like 0.5%. If she puts money into a New Zealand bank, maybe she can make 5%. Okay, so what she does is she goes to her New Zealand bank, here it is, the NZ Bank, and opens an account there, and that's right, she makes a deposit of that big bag of New Zealand dollars at 5%, okay? So she's now a depositor at this bank. So what does this mean? That's right, she's collecting the spread between this 1% that she's borrowing at and the 5% at which she's effectively lending to the New Zealand bank at, which means she pockets the difference, she gets 4%, okay, and she can pop that into her nice flowery house coat here. Now, that's not a problem for Mrs. Watanabe, of course. You know, she's making money, it's nice, there's no reason why she shouldn't be able to do that. She can borrow at one rate and lend at another, you know, for all the day as long. And by the way, she doesn't necessarily have to lend or put deposits in a bank. She can do anything with a carry trade. She can invest in anything she wants to. The issue is that she's doing it in another currency and she's looking for more yield. So she's looking for an investment that's going to make money for her and also maybe some currency appreciation against the yen as well that she pockets, but she makes all of that money. So why is this a bad thing? Okay, so it looks like win-win for Mrs. Watanabe and also for the New Zealand bank, and presumably the Japanese bank is making some money by lending at 1%. Well, the problem is that she is a seller when she does this. When she does this carry trade and converts into New Zealand dollars, she is selling her yen in order to buy New Zealand dollars. And of course, we all know about supply and demand. When you sell something hard enough, if everybody's now selling, what it does is it drives down the price. It's like in a sweet shop. If nobody wants to buy a certain type of sweets, then the sweet shop owner is going to discount that price of sweets. And that's the same with the yen in this case. So the net effect of this is if you have lots of Mrs. Watanabes going out, or these Japanese housewives going out, selling yen in order to buy New Zealand dollars, what does it do? It drives the price of the yen down. And this is what people are worried about with the US dollar right now, because we all know the government has dropped rates to a very low level. It means that it's quite easy to borrow in the US right now. In fact, if you want to get a mortgage, it's at historic lows. The same goes with deposits. It's easy to borrow that deposit money that people have put into a bank at relatively low rates. And then so people are worried that what's going to happen is that people are going to borrow that money and do Mrs. Watanabe's and buy euros or yen or whatever it may be that's going to be higher yielding and then invest in that other country. What's that going to do? Well, it could possibly put lots and lots of selling pressure on the US dollar and drive the US dollar down. Now, there are lots of people, of course, who believe that having a cheap dollar is actually not a bad thing because it makes our stuff cheaper and more people will buy it. But of course, other people say it's a bad thing to have a cheap dollar because that means it's more difficult for us to buy things from other places. And of course, politicians, or a lot of politicians out there, like to have a nice strong dollar. So they are worried that if we have the carry trade going on in the US, if carry trade becomes very popular here, it will drive down the US dollar, make it a weak US dollar, a weak currency, which will leave people like that very badly, needing a drink.